Okay, let's go ahead and start working with May. All right, we will continue using the add receipt module with PDF files, but instead of using receipt, we will use the bill, and we will demonstrate the difference again between the debits and accounts being affected. So let's get going with this one. That's our food trader. All right. Okay, here it is. Let's review it. Okay, so see, previously we worked with receipts. Let's switch this interface, right? Let's click bills. Okay, things are going to change a little bit, right? What we're going to see is that we're not going to see the credit card slash bank account being affected. So let's get to it. Okay, food traders, again, let's correct it to the date we paid it. We're going to, just in case, every time we're paying it retroactively, we can just set the due date to the bill date, just for simplicity and avoid confusion. Okay, this is our supplies. Okay, that's food purchases, description. Okay, amount, correct. Okay, so here we are. What is being debited, what is being credited, right? On this interface, we see just one general ledger account. We see 60 to 100, right? Well, we know that it's an expense account and expenses are going up, right? Because we have an invoice from one of our vendors. So let's reflect that. All right, what is being credited? Something has to be credited, right? Well, nothing else shows up on this interface, but it is there. And what's being activated is this button. Once we switch from receipts to bills, we have this implied or hidden, call it whatever you want. We have accounts payable account. In our case, the number is 2100 and it is being credited. It is a liability account, right? And liabilities go up when they're credited. What it assumes is that first we book it into accounts payable. It's kind of close to the live booking mode, right? If you remember from our desktop simulation. And we are recognizing the expense, so it goes up, we debit it. At the same time, we credit the accounts payable. We recognize the liability in, on accrued basis at least. And so what happens is account 2100 goes up. And then when we pay it, we will reduce it, right? So again, it doesn't show up here, but it's there, trust me. And let's go ahead, save in next. Okay, see, it doesn't show up, but it should, right? That would be perfect if QuickBooks could show it to us. So even though, again, all you see is 6200 and that account is being debited by this amount, account 2100, accounts payable, is being credited at the same time. All right, create bill. All right. So at this point, we have this bill, right? And expenses increased, accounts payable increased, but neither our credit card nor check, if we paid it with check, was affected. So let's go ahead and pay it right now so that, we fully understand what's going on. Okay, so we're going to do bill pay, all right? Make sure that credit card is selected, right? Because we're paying this one with a credit card. And then we're going to make sure that we select the correct date because we're paying it on 5/12, right? So here it is. All right, payment 138669. Okay, so let's make sure again we understand what's happening here, right? And I'm just going to do it right here below, and then I'm going to clear the ones above so that we understand. This is our previous transaction, right? So we increased our expenses and we increased our accounts payable. What's happening here? Well, we're going to pay it with our credit card, right? So our credit card balance will go up. All right. And what else is happening? our accounts payable balance will go down. Okay, so what you see here is that accounts payable was kind of used as a placeholder, right? Ultimately, if we bypassed it like we did in the past, our expenses would go up, our credit card balance would go up, right? Because it's a liability, liability goes up when it is credited, expenses go up when they're debited. But when we used the module that we used through bills this time, right, we affected the accounts payable account 2100, right? In the first transaction, it went up. In this transaction, it's going down. So let's go ahead and clear out the previous one. Okay, so this is the transaction we're looking at right now. What's happening? Our credit card balance will go up because we're settling our bill with our credit card. So this amount right here is a credit to account 2100. It is also a debit to account 2100, even though you don't see it here. It is there. That's our accounts payable account. All right, it's being affected, it's being debited with this transaction. So we're going to go ahead and pay it. All right, and here it is. Okay, let's continue. Next we have this bill. So again, we're going to continue to solidify our knowledge with what's going on using this drag and drop feature that QuickBooks Online offers us. Okay, so here it is. Okay, we're going to review. We're going to switch. See, when we are in the receipt, we have both, right? We have our debits and credits, right, in the same interface, and they show up because we can pick, right, what are we paying it with. However, once we go to bills, it adds an additional step. We have to pay that bill, right? So again, let's go ahead and do that. All right, bill date, again, in this case, we can just set it all to 5/14. It doesn't really matter in retroactive mode, right, as long as it is in the right period. Oops, hold on. So, all right, and this is our drink purchases. Okay, 387B. All right, amount, credit card. Okay, so that's our bill. See, right here, we are not indicating how we're going to pay it because we put it into our accounts payable, right? So what's going on? Our expenses going up. Okay, so what else is happening? Our liabilities, but in this case, it's not our credit card, it's our accounts payable that is going up. Okay, so here it is. Debits and credits are in balance, even though we're entering this amount right here only once, right? And we're only entering one general ledger account, 6300. This account is debit and credit, and it is a credit to account 2100 to our accounts payable account. All right, so here we are. Let's go again and click and save. Okay. I can leave it here just one more time, just so we see. Okay, so again, we're going to go and pay bills. We can do them in batches. Actually, we can do it next time. So again, we're paying it with credit card. Again, make sure you do the payment date correctly. All right, enter amount. Okay, here it is. What is happening, right? We just booked it into accounts payable. Accounts payable went up. Now we're going to settle it with our credit card, right? So we're going to reduce the accounts payable because that part, that liability is going up. Meanwhile, we borrowed from the bank, from the credit card company to settle that liability, right? So again, previously, for example, we could just say, you know, just book the expense into the credit card. But when we're using the bill module, right, it goes through accounts payable. And so that's being affected. All right, so we can go ahead and clear that out. Here it is, right? This amount right here, it is a credit to account 21,100. This liability is going up. And at the same time, it is a debit to account 2100, our accounts payable account. Even though it's not showing up on this interface, it is there. And this amount is a debit and a credit. That's, double entry accounting. There's always debit and credit, and they have to equal to each other, right? Well, we can have, as I mentioned, as many debits and as many credits on both sides. That doesn't matter. What matters is that at the end, these two equal to each other. So again, save and close. All right, this one is paid. Let's go to the next one. Okay, let's continue with this mode of booking in this simulation. Okay. All right, here it is showing up. Let's go ahead and review. All right, here's our cleaning supplies. Again, previously we booked it in receipt mode. Now we're going to do it in the bill mode. And again, reconciliation will show us that we were successful, right? That's our ultimate check. So let's do that. 20. Okay. Okay, this one is cleaning. Cleaning supplies, description. In this case, we paid it with check, but it doesn't matter right now because, again, remember, we are booking it into accounts payable. So let's just enter our invoice number. All right. We can enter it here. Okay. Good to go. We can enter it here. Again, as history shows, the more areas we have referenced, the easier it will be to find that transaction down the line. Anyway, what's going on? Expenses going up. We know that much. Expenses have to be debited in order to go up. What else is happening? Accounts payable is going up, even though it's not showing up on this interface. It is there. Okay. This amount right here, it is a debit to account 6,400, and it is a credit to account 2,100, which is accounts payable. Again, it's not showing up on this interface. Not a big deal. As long as we know that it's there, as long as we know that it's being affected, that's all that matters. Okay, save and close, create bill. Okay, let's go ahead and pay it, just stay consistent. Okay, here it is showing up. Make sure we change it, right? We're going to do it with bank. Okay, payment date 5/20. Okay. All right. Oops, what's going on? Okay. 22341, good. Date, good. Just gotta adjust it to the right year, right? I want to make sure we can reconcile, because if this is wrong, reconciliation will not show it on the reconciliation window. That means we didn't book it right? But again, if we did book it right, it will show up. And we will check it during reconciliation. That's the point. That's the objective. Let's continue. Everything looks good, right? The check number, the date, the bank, what's going on? Well, we just covered it. Let's cover it again. Our bank account will be, our balance will be reduced. Has to, right? When the check clears. What else is happening? We're paying off accounts payable, right? We already entered the expense in the previous module, right? And again, this is something that, let's go back for a second just to show you. This is something that comes up quite often. People bring it up and they say, wait a minute, why is expense account not being affected when I am booking the bill pay? Well, the reason it's not affected, it shouldn't be, because you affected it when you booked the bill. once you're paying it, the only two things you're affecting is your bank account and accounts payable, these two, right? Again, if you didn't go through accounts payable, which we showed in previous simulation videos, you would just not have this and not have this. And see, they clear each other out, right? However, when we're using this module, we got to keep in mind that this is what happens when we pay bill. Again, expense account is not impacted during the bill pay. It's impacted when we book the bill, right? When we use that module. So again, on this interface, this amount is a credit to account 11100, and it is a debit to account 20100, which is accounts payable account, right? And it is going down. This one is going down, right? We're paying off liability. Makes sense. Bank balance goes down, liability goes down. That's how we pay the bill. Save and close. All right, next one is a credit card. Okay, we're gonna give QuickBooks Online a few seconds to upload the file. Okay, here it is. Again, we're gonna switch to the bills. Okay. Okay, that's good. Oops. All right, description, invoice number, amount correct. Okay, good to go. Okay, what's happening? Well, expenses are going up. We know that much. What else is happening? Accounts payable account is going up as well. All right, because we got that invoice because we received the drinks. However, at that point, we're just holding the invoice. I haven't paid it neither with our credit card nor with our check, right? So at that point, it's an accounts payable. Again, in retroactive mode, we already paid it, obviously, but that's what this interface implies. So we're good, right? Debits and credits are in balance. This amount right here is a debit to this account, and it also a credit to account 2100, even though it's not showing up on this interface. Again, just because it's not showing up doesn't mean it's not there, right? We have to understand that we're dealing with double entry accounting, and therefore there has to be equal sum of debits and equal sum of credits. Okay, this one is good. All right, let's go ahead and pay it while we're on this, because it tells us how we paid it, right? I mean, we could do it in batch, and we'll show that in some of the simulation. All right, so it's 05/07/2020. See, QuickBooks Online is very particular on how you enter the date. Desktop recognizes it. This one, if you don't enter the 0, it goes red. It goes, Okay, so here it is. Credit card, good to go. Let's show what's happening. All right, we're paying accounts payable, right, with our credit card. So our liability on the credit card side will go up, and it goes up when it is credited. Okay, what else is happening? We're paying down our accounts payable, so that liability actually goes down. So what you have here, you have two liabilities. This one goes down, this one goes up, right? Because we paid it by borrowing again. So we borrowed the first time from our vendors, and then to settle that debt, we borrowed from our credit card company. Very typical, right? All righty, we're good to go. Let's see, amounts all good. Save and close. Okay, then we have utilities bill. All right. Again, let's continue with this module to solidify our knowledge. Okay. I'm going to give QuickBooks its time. Okay, here it is. Gonna switch to the bill module, right? Okay, utilities to go. Okay, let's change that to none. Change this to none. Okay, this one it recognizes correctly. Awesome. Okay, amount correct. Again, although I gotta give it to them, QuickBooks does a good job attempting to recognize the category of expenses. It is our job to make sure we select the correct one. All right, it is far from being capable of doing that on its own. So this is more of a convenient feature, hit and miss. Your job is to make sure you do that. Your job is to make sure you review the amounts and make sure that they match, even though QuickBooks might remember something different. All right, we good? Let's make sure we understand what's going on. Utilities expense goes up. All right, we haven't paid this one yet, at least not in the QuickBooks Online. I mean, in physical world, yes, we're doing it post factum, so we did pay it. But in this case, we haven't paid it. It's sitting in our accounts payable, right? So that liability is going up. Liabilities go up when credited. Expenses go up when debited. This amount, double entry accounting, I don't care whether they put it once or twice, right? We know there's debits and credits, and we know the sum of them equal to each other. Otherwise, you don't have an accounting entry. Okay, so this amount right here is a debit to this account, and it is a credit to accounts payable. 2,100. Save and close. Good to go. All right. Again, let's go ahead and pay it right away. All right. This one we pay with our bank. Okay, so again, see if I do this. Oh, it recognized it. Awesome. Oh, I guess I did something wrong the first time. It didn't like it when I did it the first time. Okay, so here we are. Date. Everything is good to go. Again, let's make sure we understand our debits and credits. Once the check clears, bank balance will be reduced by $450.85, right? They're going to take the money. What else is going to happen? Expenses are not going to be impacted at this interface, right? We booked it previously when we booked the bill. This time, all we're doing, we're paying off a liability, accounts payable, right? So here it is, debits and credits are in balance. This amount right here, it is a credit to this account, right? 11,100, and it is a debit to account 2,100, even though it doesn't show up on this interface. Whether or not it shows up, that's not important. It is there. All right, we're good to go. Save and close. All right. Now we have our big lease invoice, and we cannot book it through that interface. That's good. It's important to understand those limitations. The reason we cannot book it through that interface is because even though, again, we're paying it with a check, and we will have to credit our bank account in the amount of $1,375, we have to debit multiple expense accounts. And the interface that we used to book previous invoices does not allow for it. You can only have one. And that doesn't serve us well. So let's just do a check. Okay, so here it is. Bank, all right, good. All right, make sure we select the correct check, 1015. Okay, good. Here, they're here. Let's double check our amounts this time, right? Because even though it remembers, your amount might change, okay? And you want to reflect it. Okay, so what do we have? Okay, 1,000, 150, 50, 80, 95. Good to go, all right? We could enter our, let's update the invoice. That's the other part. Not a bad idea. 2, 3, 5. Okay. So we can do that too. Okay, so debits and credits, what's happening? Well, we just talked about it, right? Our bank balance will be reduced, and to reduce it, we have to credit it, right? Here it is. What else is happening? Our expenses are going up, and all of these expense accounts will be debited by their corresponding amounts. So let's capture that. Okay. Okay. Here it is. And we're in balance, all right? So these amounts right here, they're debits to these accounts. And this amount, which is the sum of them, is a credit to this account. Makes sense. Expenses going up, we're paying it with a check. Once the check clears, our bank balance will go down. And being an asset, it has to be credited in order to go down. So again, let's save in new. Okay. Okay, we're done with checks. And now we can move forward. Okay, let's go ahead and book our credit card receipts. First we have gas station. Let's continue with our PDF drag and drop module. In this case, okay, we're going to use receipt selection just to show the difference. And again, this is a receipt. I mean, we could put it through accounts payable, but what's the point, right? That's so far-fetched from reality at that point, so we're not going to do that. Okay, so we have our gas station receipt, and see, we're going to stay in receipt now, unlike we did in the previous when we booked invoices, right? This is going to stay in receipts because it is a receipt. Okay, we're paying it with our credit card. Payment correct. This is fuel. Oops. There it is. Alright. Amount good. Okay. So far so good. What's going on? See, in this case, we do have two accounts showing up, unlike when we booked invoices. So expenses going up. We know that much for fuel, right? So it has to be debited. What else is happening? Well, we are paying it with a credit card. So it has to be credited. See, now we don't have the accounts payable 2100. It's basically bypassing it. It's instant. So here it is, debits and credits. This amount right here, 128.65, right? It is a debit to account 63,200, and it is a credit to account 21,100. All right, so we're good to go. Date is correct. Everything is good. All right, we have another gas station receipt. Again, let's just solidify our knowledge. By now you know, you can follow along, but practice makes it perfect. The more you book of those, the more confident you will become. Okay, here it is. Okay, see, we're choosing receipt. Alright, so credit. Alright, payment date, picked correctly, fuel. Alright. Picked up amount correctly, excellent. Alright, debits and credits, right? You know by now, but solidify. Expenses go up when debited. Alright, liabilities go up when credited. So here it is. Debits and credits are in balance. This amount right here, it is a debit to account 63,200, and it is a credit to account 21,100. Okay, so we get to review it here. Remember on accounts, when we used the bill, the accounts payable bypass, we would only see the expense. We didn't see that. I don't know why QuickBooks didn't do that, but you know, it should be there. Okay, good to go. Here one more, online market. What we did, recipes book, American flag, DeCre. Well, here we have a combination, right? We have expenses on what I would call, you know, training materials, recipe books, right? And we have advertising and promotion. So we can't use this interface, all right? So we basically would have to go through expense interface. Okay, so we have online market. Okay, credit card, correct. 5/15/2020. Okay, reference. All right, let's delete this. Okay, make sure. What do we have here? We have a recipe book, that's training material. All right, and then as far as amount, we have to allocate sales tax, right? So we did the math in the background. So with the sales tax, it will be 5438. And what else do we have? We have advertising and promotion, all right? So that's the rest of it. Okay, so it adds up to $201.19, right? Okay, so and you can do that mathematics on your own to calculate the allocation of the sales tax. What's happening here? All right, debits and credits, always debits and credits. So we're paying it with a credit card. Liability goes up, has to. What else is happening? Our expenses on training materials go up, has to be debited. What else is happening? Our advertising and promotion, right? We're buying items to decorate our food truck a little bit. For the 4th of July, we got American flags, some decor paint, right? So those have to be debited. Training materials and expense, right? Advertising and promotion and expense. They're debited right here, and our credit card, our liability goes up. It is credited right here. Let's see. What's important to understand is that we wouldn't be able to book this transaction using drag and drop interface because we have two expense accounts that are being impacted, right? And you can have as many as you want, again, as long as the sum of debits and the sum of credits equal to each other, and in this case it does. This amount's a debits to these accounts. This amount is a credit to this account. We're good to go. All right. What else do we have? We have a payment. All right, we've done it before. We can do it through transfer. All right, so we're paying from our bank account. We know that much. We always do. And we're paying our credit card. Here it is. What amount are we paying? All right, and what is the date? 5/15/2020. Excellent. Okay, we can enter transaction number for reference. Okay, here we are, debits and credits. What's happening? Well, we know that our bank account balance will be reduced because we're paying down a credit card. So they're going to take money out from our bank account. Bank account is an asset. It has to be credited to be reduced. What else is happening? Well, we're paying down our credit card, so the balance on the credit card will go down. It's a liability. Liabilities have to be debited in order to go down. So here it is. So this amount right here, right, it is a debit to account 21,100, and it is a credit to account 11,100. So they also show balances right here. It's fun, interesting, not related to booking transactions in this case. So again, for convenience, doesn't hurt. Okay, saving you. Okay, I'm gonna exit. Okay, we're done booking credit card receipts. Next, we're going to move towards reconciliation and see if we did a good job.